What's up, Korea?
Hey, everybody.
How's everyone?
Hey.
How are you?
How are you? Sorry, guys. I thought we were going on at 11, so this is a nice surprise. How are you? Good morning.
It's great to be here.
It's great to have you, and I believe we have Donald Trump Jr. also joining us. Can we phone a friend? Is he coming in? Okay. All right. Well, I guess we could get started. The three of us here. I am Jaclyn Melnik. I am the founder and CEO of Token Relations. I also host a podcast called the Talking Tokens podcast, as well as Crypto in America. We actually had Asher on earlier this month when we were at the SALT conference, so it's great to see some familiar faces on stage today. I think we all know what American Bitcoin is, but I think providing value on what is the potential behind Bitcoin is a bigger conversation that needs to be had. And I would love to ask both of you to start off kind of on the front of that. How do you really think about Bitcoin as a bigger store of value? Obviously, it is the world's largest cryptocurrency by market cap, by trading, et cetera. But from your perspectives, how do you kind of see the value today and where is it going?
I'll start off. Bitcoin is the one scarce asset in the world. Before Bitcoin, gold was the currency of all the previous generations, and gold's call to fame was an ounce of gold at any point of history could always buy you a really nice suit. An ounce of gold 100 years ago, $20, was a really nice suit. An ounce of gold today is still a really nice suit. But the hedge of gold is it's not finite. Gold, as the price of gold increases, there will always be more supply coming into the market. Mines have ASICs, different ASICs than the servers we use, but in all-in sustaining costs. As the gold price goes up, 10,000, 20,000 an ounce, I wouldn't be surprised if we were mining off the moon or meteorites at some point, whereas Bitcoin will only ever have 21 million Bitcoins in the world. Regardless of how many buyers out there, regardless of where the price of Bitcoin is, there will only ever be 21 million Bitcoin. Bitcoin is the one true scarcity asset. And when you look at the flows, stock to flow of Bitcoin, when you look at the ownership, when you look at the adoption, we are still so early. Out of the float today in Bitcoin, we're less than 20 million of the 21 total million. But of the 20-ish million Bitcoins out there in the public float, if you subtract how much Bitcoin in dormant wallets, ancient wallets that haven't moved, let's look at the wallets that haven't moved any Bitcoin in a year, 3 years, 5 years, 10 years. And what that will show you is 70% of the float hasn't moved. Those are coins that are not in the public float. And then contrast that with the adoption, the institutions coming in. In the US, 6% of the total Bitcoin float is owned by US ETFs, with BlackRock, IBIT being one of the majors. Today, that sits at around $90 billion. BlackRock's ETF, on an average, buys about $250 million of Bitcoin daily. Stock to flow, availability, those are all buyers, those are all coins that are being taken out of the supply and put into cold storage. When we see the additional inflation of all central banks in the world, no one's immune to it. Everyone is inflating additional paper money. Everyone wants Bitcoin, and I think that we are so early in the convergence, and the price of Bitcoin, really, if you just look at the supply demand and do a sensitivity analysis, it's only looking very, very favorable.
So Mike gave a great explanation for why Bitcoin, and so now why American Bitcoin. we designed a company that would take the best parts of a mining business and the best parts of a digital asset treasury, a DAT business, and we combine the two of them. So like the other miners traditionally, we run enormous fleets of computers that are securing the blockchain, and we're being paid for that in Bitcoin. We do so all over North America, but with a lot of machines in West Texas. What this does is this allows us to mine Bitcoin at like a 50% gross margin. So we're able to accumulate Bitcoin through the mining business more cheaply than just buying spot. But we also took the best parts of a treasury company. So these treasury companies are out there trying to acquire as much Bitcoin as possible, something that we want to do. But we're able to blend this with the mining business and compete as this very asset light. We only have the computers, asset light business that is computers and Bitcoin, and that's it. So when investors look at ABTC, what you're really seeing is the opportunity to invest in just the mining computers and just the Bitcoin stack with a very lean team and a very, very accomplished, experienced mining operation.
So beyond just buying and holding, which is something people have historically done, how do you kind of see institutions being able to extract more and find new use cases or unique ones through American Bitcoin or other avenues that you're exploring?
Well, the difference between American Bitcoin and buying an ETF, when you buy an ETF, your ownership ratio will only represent 1, less the fees that the ETF charges. When you buy a company like American Bitcoin, an actively managed accumulator, you're betting on the management team that based on the tools that are made available to us, the ability to monetize liquidity, the ability to monetize volatility, the ability to use our stack, use our collateral to drive additional value to our shareholders, ultimately increasing the Bitcoin per share ownership. That is the one metric that is most important for every investor. When you buy an ETF, your ratio of ownership will always be 1. When you buy an accumulator, an actively managed accumulator, when done right, your ownership per share in Bitcoin should increase over time. And we do that with, for example, converts. Converts is a tool where it allows us to monetize our volatility. An ETF won't do this. Bitcoin is innately very volatile. A stock that tracks Bitcoin is even more volatile. We're able to issue very low price converts that convert at a premium to our share price and buy Bitcoin. Bitcoin, an asset class that has been increasing between 50 and 70% a year for the last decade. And we're able to take in converts near 0% interest that convert at a premium of 30 to 50. This is just only one mechanism of the tools that we can use as an actively managed treasury company to increase the value and the Bitcoin ownership per share for our shareholders.
So on that note, I'm curious as well, how do you kind of think about the institutions that are standing out right now? What are they doing right compared to those that are kind of just idly waiting aside and watching from the sidelines?
So there's a few lenses to that question. So first, there's institutions on the buy side that finally want to get into crypto and into Bitcoin. So for a long time, we would come to conferences and everyone would ask, where are the institutions? It's now very clear that the institutions are here. We've spoken to sovereign wealth funds, we've spoken to hedge funds, we've spoken to family offices. Crypto is now a part of the portfolio that traditional institutions and TradFi want exposure to. And so we're now at a stage where there's enough maturity, the payment rails are in place, the policy regimes in different countries are finally coming around to the crypto revolution. And for many people, the first place they want to go is Bitcoin. Right, it's one of the most seen as the most trustworthy among cryptocurrencies. And once you're in Bitcoin, now you're onto the blockchain, right? And on top of that, now with the stable coins, people ask if, as Bitcoin guys, do we like stable coins? I love stable coins because stable coins get people onto a blockchain. And once you're in the digital world, your ability to enter into Bitcoin and related currencies is now much easier. And also to work with companies like American Bitcoin to accumulate as much as possible.
So how are they managing their Bitcoin exposure, or how are you advising them to manage it, institutions specifically?
It's really the allocation. It's just starting with any type of allocation, any type of purchase. We've been very pleased to see in the US, pensions, institutions, endowments moving off zero. We've seen Harvard start taking an allocation into into Bitcoin. We're seeing local pensions, local states taking ownerships and positions in Bitcoin. It's never too late. It's really just starting with that initial purchase. We're seeing sovereign wealth funds out of the Middle East, some of the largest, starting to take large 9-figure size positions. And this is really just the beginning. When we looked at the previous cycles, it was primarily driven by retail. This is the first cycle that we've seen that we're really starting to see institutions just to really start dipping their toes in. And the amount of capital out there when the rest of the flow of institutions come in relative to the available supply that I outlined earlier, it's incredible, exciting market dynamics for Bitcoin.
Yeah, how much has it changed, would you say, from like maybe a quarter ago, 2 quarters ago to where we are today? I would imagine the current administration in the US has a lot of positive effect on that front, but what are you guys seeing in the conversations that you're having on the front of exposure there?
So one of the big changes, and I will speak to the American side, is we finally have a regulatory framework that is in place, right? It has been signaled. We have the first Bitcoin president. Obviously, the first family is also very involved in Bitcoin. Eric Trump is our co-founder. We've worked with folks who are able to articulate the importance of crypto to the United States. And now, finally, the lawmakers in America are very much in favor of doing more. Texas has a Bitcoin reserve that they're trying to fill. The U.S. is deciding this fall what they want to do in terms of a strategic Bitcoin reserve for the United States. This is night and day from what it was a year ago. And so we hope, obviously, in the coming quarters, there'll be even more clarity and there'll be even more sort of excitement from the lawmakers in supporting us as innovators in the space to create jobs and grow the Bitcoin economy.
Amazing. I believe we also have Donald Trump Jr. joining us in a moment. But before we get to that, I want to talk to you guys a little bit more about the long-term value side of things when it comes to Bitcoin and generation for American Bitcoin. How do you kind of think about that in a strategic way that makes people more, long-term thinking on this front?
I think the benefit of an actively managed treasury accumulator like us is we unlock additional tools, the more scale, the more size that we get. And I'll give an example. We touched on earlier on how to actively utilize collateral and a stack. As we grow our Bitcoin position, we can take low LTVs and tap into the fixed income market. Fixed income market, which is extremely low cost of capital, to bring on additional Bitcoin, increasing the Bitcoin per share. Michael Saylor, the godfather of treasuries, does this so well with the perpetual preferreds. But as we are able to grow our size, we're able to identify more demographics, more liquidity pools, and design new products and instruments to provide exposure to Bitcoin while increasing the Bitcoin ownership per share for American Bitcoin shareholders. Amazing.
Don, you there? I saw you pop up before.
I apologize. I've been trying to get in for a little while. I promised Mike I would join, but I'm literally in a cabin in the Yukon about 300 miles from the nearest town. So the Starlink is not working all that well because it's raining really hard and overcast, but I'm doing my best. So I'm having a little hard time hearing you guys. Hopefully you're hearing me.
That's all good. We could hear you. We got a phone in Elon. Tell him to fix Starlink for you.
No, the Starlink is normally great. It allows me to do these sorts of things, but I think they brought the mini instead of the big one, so the bandwidth isn't quite what we'd want it to be.
There we go. All right. Well, we've been talking about institutional levers, adoption on that front. But Don, before we go into that further, I'd love to zoom out with you and hear, why do you kind of see Bitcoin as a once-in-a-generation opportunity for global financial adoption?
Well, listen, I think it's an incredible opportunity for global financial adoption. And I think it's borderless, it's efficient, it has the potential to disrupt so many inefficient technologies. I sort of always tell the story about how we got into Bitcoin and crypto generally, and it was because we woke up one morning and we were totally debanked in an instant because I guess our politics didn't fit with the powers that be, and we didn't realize for a long period of time that we were essentially just the top of the food chain in the Ponzi scheme that was the traditional financial markets. There wasn't a time before that instance that we couldn't call any banker in the world, get a loan. It was easy. It wasn't so easy for everyone lower down in that pyramid. And we realized if we could be shut off, anyone could be shut off. And so I think the opportunity is so incredible to prevent those kinds of things, to truly democratize finance, to educate young people about finance. I mean, they're fascinated with Bitcoin and technology. They're into that. These are people that are incredibly sophisticated in that manner, but probably don't know how to get a basic loan through the TradFi system. So I think there's a lot of great opportunity to financially educate people. And I think, as much as Matt and Mike have been in this and as long as they have, I think we're still at the very beginning of this. We're in the infancy of Bitcoin and crypto.
Yeah, on that front, Don, you talk about being at the beginning of this, and obviously Bitcoin is around for over a decade now, but you guys have really got a foray into the space in the past couple years, I would argue. So what do you see as like the biggest opportunity today?
Wow. Listen, I think it's creating the
Cliffhanger. All right, we'll give it a second, but
I think, frankly, we're seeing it play out already. I mean, some of the biggest bankers in the world 3 months ago were saying that it's a scam, it's this and that and the other, and now the institutions that they run are buying billions and billions of dollars worth of Bitcoin. You don't do that if you really think it's a scam. I think they felt that they were being left behind, and they realized they had to jump onto this. So what I'm really proud of what we're doing with American Bitcoin is I want to make sure that America is leading the way in Bitcoin infrastructure at home, that we're securing leadership for the next financial revolution, that we're doing that in America. To places that don't exactly align with American values. So I think America has to lead from the front with this, and I'm glad to see that that's really happening.
yeah, I would argue not every country or market is ready for Bitcoin adoption yet. I'm curious to hear from your perspectives, Matt and Mike. How do you kind of think about approaching markets for entry beyond just the American market? And then Don, we'll get to you as well. But why do most markets today not really work for a Bitcoin first strategy, and what will it take to get them there?
Well, there's two parts to that. First of all, Bitcoin is for everyone, and we want to see worldwide adoption of Bitcoin. But when we look at treasury companies, accumulator companies in jurisdictions and markets outside of the US capital markets, there is a parameter set, there is a consideration list of what we believe contributes to the success or is best positioning a treasury company for success in the capital markets. And part of that is regulation. The exchange, the local regulators need to allow for this type of business. They need to allow public companies to own crypto, be able to own underlying Bitcoin. Liquidity is very important. There are so many markets in the world where there's simply the trading volume of the average stock is hundreds of thousands of dollars a day, compared to, let's say in the US, it's hundreds of millions of dollars a day. And why that's important is your upper ceiling on your rate of expansion as a treasury company is really your liquidity. Liquidity is by far most important. And you need to have a market that the adoption of the retail market, the investors are ready for it. There are a lot of markets where the institutions have mandates where they can't purchase Bitcoin yet, even Bitcoin tracking stocks. You have a retail market that isn't like South Korea, where you have such an incredibly young tech-savvy population. Everyone's trading stocks. A lot of even our US flows, big US IPOs, Circle, Robinhood, we were very surprised to see a lot of those flows are driven by retail Korean individuals. Not every market has this.
In short, to be successful, you need a culture that embraces crypto, and we love Korea because Korea understands the power of cryptocurrency and the power of Bitcoin, and so this is a relationship that we hope to continue.
Amazing. And then Don, from your vantage point, why do you think traditional finance is primed for disruption, and why is Bitcoin at the center of that story, especially with the Korean market in mind too?
Well, listen, I echo certainly what Matt and Mike have said, but legacy systems are slow, they're costly, they're exclusionary. The banks and the SWIFT systems can't keep up for where the world is going. Bitcoin's been transparent, resilient, it's borderless. There's no central authority, no gatekeepers. And so I think based on certainly what I've experienced, the real distrust in centralized institution is rising. People want alternatives. They understand that if they can shut off Trump and the Trump organization and do it willy-nilly, they can really do that to anyone. And if they will do it to Trump, with our platform to be able to push back, the soapbox that we have to be able to stand on and scream about it, if they will do it to us, who won't they do it to? So traditional finance, in so many respects, is broken. Bitcoin, faster, cheaper, fairer. And that's really why this disruption is inevitable to me.
Yeah, down on that note, though, do you feel more secure and hopeful for the future with, blockchain technology and Bitcoin at the forefront and the work that you guys are doing?
Oh, 100%. I mean, just from my world where I was a real estate guy, right? I built buildings for the first 25 years in my career. That's what we did. We built hard assets. This is a very, very different thing. I think as people figure it out, as the adaptation, as the use case starts getting better, as utility, gets there, this is going to be where everything is going.
100%. Amazing. And, as we've talked about throughout this conversation, Bitcoin isn't just about money. It's a tool for influence institutions and nations to use, and also just kind of a way to protect yourself, depending on the topic and conversation, as we've discussed throughout this conversation. But when you think about Bitcoin diplomacy, I'm curious, for Matt, Mike, and Don as well, what does that really mean in practice? And how should institutions think about positioning Bitcoin in a global market? And then how do you guys think about it internally?
So Bitcoin, for us, I think it's a global opportunity, which creates anything that can create prosperity on a global scale is a form of diplomacy, right? So if you look at what Bitcoin is able to do, it's a means for people to transact value across borders and increasingly across time, right? So historically, dollar bills, if you held them in your bank account, they may still be there in 50 years, but you can't buy the suit the way that you could have 50 years ago. Maybe with gold you could have, but I mean, it's a little bit cumbersome. The nice thing we believe about Bitcoin is that Bitcoin is a store of value that will stand the test of time. And so if we look abroad, as we sit in the United States, this is a way for us to share value with people from other countries in a way that is not reliant on any one government's form of currency. So for us, this is an opportunity for global prosperity, and by doing so, this is a great way for diplomacy to occur.
What are your thoughts on this front?
Bitcoin is empowerment, and we want to advocate for the adoption of Bitcoin. For so long, crypto hasn't really had a voice, and that is why Don Jr. and Eric, they're the best voices. They're the voices that crypto needed. They're the voices that actually encourages people to look at a new form of financial technology that isn't the inundated banking system. It is the future. This allows everyone to take financial freedom by their hands, by their phone, be able to control their transfers without middlemen siphoning off their hard-earned dollars. We want to play our part in advocating for global Bitcoin.
Yeah, following that, Don Jr., from what Matt said, you and Eric are a voice for this space, and you guys definitely have, the influence, the brand equity, and other aspects. How do you kind of think about that when it comes to spreading Bitcoin diplomacy and making sure that this is something that doesn't just last for 4 years, but for eternity, essentially?
Well, I think we're way past the point of talking about it, whether it's going to last or not. I think you see that every day with the adaptation from a diplomacy standpoint, from the global perspective. I think just the natural hedge against inflation and centralization in so many of these countries that many would think, hey, they may not be ready, but I think their people are, and I think that's a huge aspect of that for so many people around the world. I've been everywhere. Everyone's got a smartphone. Everyone's got this, and yet they may have 1,000% daily inflation. I think this is a natural hedge against that for people to maintain their value, and I think a prosperous world is good for the world. A prosperous world is a peaceful world. It's a safe world. If you incorporate sort of to the last question, to follow up a little bit what I was talking about, I mean, the efficiencies and taking out the middlemen, like Mike was talking about, of blockchain technology. Again, the hard asset guy, why were we paying points on a deal to get loans so that a banker can push a piece of paper from one side of the desk to the other? Why were we paying points on a deal for title insurance that could so easily be on the blockchain? You could have instant information, know your deal is secure without paying guys in a market where the the rates were statutory. You couldn't compete. You're just paying this. So you gave it to one guy because he took you to the basketball game as opposed to another guy who didn't. It didn't make any sense. So I think that efficiency also creates prosperity for so many of the people that are getting feed to death for the last few years in the regular banking system.
Right. Then I want to really look to the future with the three of you, looking ahead. If you were to design a Bitcoin institutional strategy from scratch, starting all over, what would you do differently from the conventional models that you see today?
I mean, I would say we have. I think American Bitcoin is
There we go.
Right out of the box. So we launched this company April 1st. We took this company public in the United States on September 3rd. This is basically a record for companies getting to the public markets. And getting to the public markets was so important for us so that we were able to really run our strategy and allow the shareholders to participate in the strategy with us, taking the best parts of mining, no people, basically just the machines, and then the best parts of a treasury, which again is just a very lean operation focused on these cool technologies that Mike was referring to that allow us to really grow the stack of Bitcoin. This is, to me, this is what would the best of both worlds, and that's why we're so excited to be here.
Matt?
To what Matt just covered, just to put this into perspective, American Bitcoin is a 6-month-old company. It's just been 6 months and we are already public on the NASDAQ. We're already here being able to share this conversation with all of you in South Korea. To the question, it's really just, the suggestion would be to start yesterday, and obviously we can't travel back in time. It's just starting anywhere, starting today. We're super excited for what we're going to accomplish over the next 6 months, given that it's only been 6 to get here today. And there is a lot on the horizon. We think South Korea is an incredible market. I think the new administration is so progressive, and crypto has very bright days ahead in South Korea. It's such an incredible demographic. Everyone loves trading crypto here. Your retail flows are incredible. For just retail flows, I think you're 25% of global token exchange volumes. There's very bright days ahead for the crypto markets in South Korea.
And Don, we'll finish with you. Let's bring it home. From your perspective, why do you see Bitcoin as not just an investment, but an opportunity for the future of money and markets? And we're 6 months in on American Bitcoin. What else does the future look like?
Wow. Listen, I think the future looks very bright. I think we haven't even scratched the surface of what we can accomplish for so many people. And I think everything that we've discussed about that Mike and Matt have really addressed really creates the democratization of finance, which is something that has been lacking for so long. Again, so many people at the top, they want to stay there. I don't think anyone fully realized just how unfair those systems were for so long. And so we're incredibly excited to be in there. We're honored to be able to be a voice for that. The potential for South Korea over there for crypto and Bitcoin in general is absolutely spectacular. So we're just excited to be a part of it, and excited to be able to lend our voice and our soapbox to it so that everyone else understands and is able to adapt quicker and get on the train.
Amazing. Well, Matt, Mike, Don, thank you so much for taking the time to talk today, and thank you everyone for listening in.
Thank you for having us.
Thank you guys. Sorry for the background. It's a little bit rustic here.